Yo, what's going on, guys? Welcome back again to another video. Today's video is going to be a very exciting one because I've got a brand new strategy for you guys that you could follow and could help you a lot in your trading. And today's strategy is going to be called the wick strategy. Yes, the wick strategy. Now bear with me, I'll explain everything. I'll explain how you can trade it and how you can benefit from this wick strategy. So without further ado, let's just break it down. All right, guys, so jumping here on the charts. Now, if you're a bit confused of what's going on my charts right here, just watch the previous video I did. It's gonna clarify everything you're seeing on your charts, right? I have this whole thing for YouTube where I keep some analysis here to show you guys that it works, right? The reason why I keep all these analysis on the charts to show you how everything reacts perfectly from the levels that I tell you and teach. So I basically preach what I teach. So yeah, so without further ado, let's break down this wick strategy that I have for you guys, and it's going to be a game changer. So yeah, so the first thing you need to do, obviously, after you analyze your screen and once you have it looking like this, once you have your psychological levels, I mean, look how perfectly this reacted off the 167 area, right? So these levels are very crucial areas in the market. It's a lot of money going out and coming in the market from, right? Now, when I say the wick strategy, what do I mean by that? I'll show you. So the first thing you need to do is go on the 4-hour time frame. We're gonna start on the higher time frame, of course. And what I want you to do is double click on your thing, and then I want you to color code your wicks to blue and then your candles to black. You know what, for the sake of the video, let's make our wicks red. Boom. Right, now we can very much see the wicks, right? So color code your candles all in black and make your wicks in red, or you know, colors don't really matter, but for the sake of the video I'll be using black and red. Red for the wicks and black for the candles. So this strategy, you basically focused a lot on the wicks specifically, but not just anywhere, right? I need you to focus on the wicks when they are near psychological levels, when they are near quarter points, when they are near market structure, and so on and so forth. So let me just give you a great example here, right? Let's play the market back right here. Now, let's say the market is right there now, right? And the market makes a swing high, and you can see the wicks. I want you to take your triangle tool and then highlight these wicks. I want you to highlight these wicks and then drag your tool across. And then I want you to play the market and see what happens. Boom. We're now inside of the wick area from the previous swing high. Once we're in this area, what I want you to do is drop down to 1-hour time frame. So now look what happened here. Market came back up in that area from the 4-hour wicks and then gave us another swing high on the 4-hour, and it also gives us a few wicks here from here to here. And this is where it gets exciting, right? Boom. Look how beautifully this... Oh, what did I do? I think I pressed the wrong thing. Anyway, let's bring the market back to here, right? So now we are inside of a wick area from the 4-hour time frame, and now we're making another wick area on the 1-hour time frame. And I want you to highlight that area as well. And I want you to grab your short position from, and then put your stop loss above the swing wick high, and then target out whatever, 1 to 2, 1 to 3, 1 to 6, whatever you'd like, right? And I want you to set limits, because sometimes the market moves so quickly you won't have time to go on your phone and execute yourself. Just set a limit, and once the market comes back into that 1-hour region, not the 4-hour, don't take trades blindly on the 4-hour because the zone might be too big. So I want you to refine it down to a 1-hour time frame. So then you'll have a 12 pip stop loss, which is not a big deal, right? Beautiful, right? So then grab your tool and then you let the market play out. Boom, boom, right there. You're literally triggered in the market. You're triggered in from this wick area, and now you're ready in profit. And then let's play the market. Market drops and then hits your take profit. And look what happened here. Let's say you've missed this area, right? Let's say you've missed this entry. Okay, mark this area up. Boom, boom. Look what happened. Market drops, right? Market drops. Market comes back into that area again, gives you a re-entry, give you another try, and then you could have taken a sell from here too. Nope, that's a buy. and then you could have taken a sell from this area too, right? Stop loss above the wicks, take profit, psychological level. Beautiful, 1 to 10. Now you might be wondering, well, why can't I just take it here and there? It failed. Now the reason why you don't take it anyway, like I said, it needs to be near psychological levels, it needs to be near quarter points, it needs to be you need to identify trend. Firstly, you need to make sure you're bullish. If you're buying, you need to make sure you're bearish if you're selling, and so on and so forth. You can just blindly take it, right? If you miss this entry, you would have had another entry there. So that's 2 examples, and then I'll give you another buy example for you guys. Let's just cancel this here and go back to 4 hour, and I'll give you buy examples because I just gave you 2 sell examples that worked out super well, right? We've identified our 4 hour. Now same thing here. Look what happened. Same thing here. Boom, a 4 hour zone area, wicks area. You highlight that area, and then you wait for the market to come back into that zone, into that region. And then once you identify that, you go down to 1 hour time frame. So now we're going to look for another zone inside of that zone, right? Right here. Look at this. Then you refine it to a 1 hour zone. Boom. Market wicks through it. That's absolutely fine. It's fine, right? That's why you need to always wait for candle closure. You can't just enter a buy or a sell while the wick is still open. You need to wait for the candle to close so you know what the actual price and what price is trying to tell you, and then you can jump in, right? There's the zone. We got it from here, a refined entry from the 1 hour area, right? And then boom, market came back, pierced through it, little stop hunt. That's absolutely fine. We'll expect it because we wait for what do you call it? We wait for closes of the candles so we don't get wicked out. Now let's say you miss this area up, right? What do? There's another zone area inside of, look, you see how it's layers now? It goes from the 4 hour, refine it to a 1 hour, then refine it to 30 minutes even if you'd like. So let's go on the 30 minutes and see how that looks on the 30 minutes time frame. You would have had this area here, this little wick area. Boom, market came back into that area and then started flying. Let's say you've missed this. Let's say you've missed this trade, and now the market is here. Look what happened. It gave us a wick area, and then market came back inside that zone and then started flying to the upside. Guys, this strategy is absolutely cracked. I don't know why nobody's talking about it, but I will, because it's going to change your trading and take it to a whole new level. Now, mind you, I'm not saying this is a 100% win rate strategy, but this is pretty damn good. This is probably over 70-80% win rate if you actually use it right and combine it with Fibonacci, combine it with psychological levels and quarter points, right? I mean, this just works every damn time. This whole zone area right here, look at that. All this region, market comes back into the area, gives us nice buys opportunity, comes back into the area 3rd time, gives us beautiful buy opportunities, right? And so on and so forth. The market keeps doing this. Now, don't mark an area like this and be like, oh, but it failed. No, you're the one who's wrong, because the market is very bullish. So how do you expect the market, if it's making higher highs and high lows, to respect an area that you plotted on the chart? You have to look for buys when the market is trending to the upside. And look what happened. We have a wick area right down here. Market comes back, wicks inside that zone, inside that region, as well as we have a psychological level. What more confidences do you want? Beautiful trade, and then boom, look, market flew for like 200 pips to the upside. So this is the wick strategy, and if you guys have any questions or would like an in-depth breakdown of the strategy, because I do teach it to my students in the Discord, so I'll leave the link down below in the description if you guys are interested. If you guys want to join, I'll leave the link down below for you guys. Click join in, talk to me, and then I'll be able to explain in further detail. But yeah, I mean, we can go on and on and on about examples. It's cracked. The strategy is nuts, man. We have an entry here, a lot of opportunities there, sell opportunities up here. I mean, yeah. This strategy says enough about itself. I don't have to say much, but you guys can see it. Do this and it will help you a lot. So yeah. Anyway, guys, this is it for today's video. Little wick strategy. If you guys did enjoy, let me know by leaving a like, comment down below, and subscribe if you haven't already. And with that being said, I'll see you guys in the next one.